In this web video, I'm going to follow through on the September 3rd blog post with the S&P that we had a short position in the bear trend and show how market states that hold structure can follow through in the early evening session and into the next session. So you'll kind of get a sense of how market states move from one session to the next, and you get kind of a better feel, better awareness of what's happening on the macro structure. So here's the prior session. We had our fade, our reversal signal that played out to 1 APMD down to the directional, and we had that last press into the 1954 resistance, and we rejected. And then here we have kind of the overnight, early evening action of sideways, and then things start to pick up in the Asian hours, and we get a little more follow through to the downside. Again, we're still negative structure. We're working that bear trend, anticipating a move to the DP. That's still in play, and the market continues to work that negative structure, and then we start to get into the midnight hour, and here's where the analytics roll. So we're getting right into the next session. So here's the price map for the next session, and let's take a look at the market state. So we see the S&Ps remain in a bear trend, and we look at the structure of that state, and the sentiment bias is a little different, a little more aggressive. We have the sentiment at the directional, so that's really putting this bear trend in an aggressive position where it really needs to stay below this 1947.25 level to keep that negative energy. So this is a pretty dynamic market state. We still have good follow-through potential, so we're negative below this 1947.25 level. Our optimal strategies is to fade momentum into the R level, so fade it into 47.25, or accept a DP breakout. So we're going to, looking for fading momentum into the R. That's the optimal, and if we get a breakout below the DP, to press it. And if we get a false signal to the downside, we have our buy DP reversal, and then the real break in structure comes if we get back above the 1947.25 level, and we'd have a buy R breakout as a hedge strategy. This is our Sierra Charts application. You can see the prior session's price map there. So that was our initial target that's kind of been adjusted up, and you can see how the R level was adjusted down. And so now we're going to move through time here, and we come up on the regular session open, and just prior to that we had the market here. We were retaining yesterday's target, press into the DP, and at this point we just fell shy of getting some fades off against the R level. That strategy didn't come into play, but the whole theme is in play here with the negative structure. Here you have a market breaking out to the downside, and it's holding the structure of 1936, and here we have another confirmed breakout below the DP, and the market follows through, and below the CRX minus at 1914.25, we're getting confirmation that the market wants to go lower. So coming into the regular session with the fact focus, we know the market is in a bear trend. We know that sentiment below 1947.25 is negative. We know that overnight the market is holding negative structure, and it broke out below the downside pivot. So we're here. We're in this strategy theme. We're in the sell DP breakout strategy theme, somewhat of the sell R fade. They didn't make it all the way up there, but we could, again, when we're looking at these strategies, it's important to understand that these are themes, and what theme is in play. The market doesn't always give you the entry, but that fading momentum into this area is part of this strategy theme. It's part of this. And now we're failing here, so now we're in this segment here. And we had a squeeze up to this level, so we have some good defined structure of where this negative momentum will break. And so as we move forward in the day, here's our regular session opening. We're coming in here at the downside pivot, and it's sloppy around here, and we've had the market trading back and through. But what do we know for a fact? Fact is, we know as long as we're below 1936, we're still in this nice aggressive negative structure. We also know that the market has to get back above 47.25 to really negate it and put us in a hedge strategy theme. So we're in this optimal strategy theme at the moment. So we're looking to accept sell signals. And here the market comes back and price qualifies. Here's our alert distance, and we come back and we get a couple retests of the downside pivot. We have half APMD, a full APMD, and then 2 APMDs, which is a little bit off the chart here, down to 1883.25. Those are our targets for the different units, and we continue to trade through the day, and the market falls shy of our initial target. We get a half APMD out of it. You can see how the market's holding nice structure. Get below it, we make a play, we don't make it into our alert distance, and then at this moment here we're starting to break that structure and telling us that we might be in for a pause, and that kind of dominates the balance of the session into the close. This was kind of the tell that it's over. It's stabilizing here, and we're not going to follow through to the downside. We're more digestive for the session, but it's end of the day, long holiday weekend, makes sense. As soon as the first break of momentum happens, it's pretty much a tell that it's over. So a difficult trade session on the 4th, but you had this nice setup on the 3rd. And this is the market's in a bear trend. They gave us an opportunity at the R level. Both strategies played out, and that bear trend theme held throughout the 2 sessions. So if you look at this whole thing as one big negative trend, riding it from here, that next leg lower, it made a new leg lower. Are we ready for that corrective part of the bear trend to make a new corrective move, or is this going to stay real aggressive and start to roll over? And that's how you can use these market states and to give you more insight to the next session. The structure tab is a nice tab to use as well to kind of follow the market states through the MC plot. So the MC value is a summation of all the market color indicator systems, and the MC value change of the MC value, that helps to define what the market state is. So you can see that we're in a -6 MC value. We've kind of been in that bear trend, and then we look, the structure bias is going to help give us more insight to that bear trend, as well as these commentaries are based off the shift, the market color change. And so this wasn't much change, so it was kind of more neutral, bear trend, but it's in a kind of more of a neutral position. So it's going to give us kind of insight to the action, and this is what happened. That we're in a bear trend, but it was more of a bear trend in a neutral posture. So it's all about market awareness. Identifying that we are in a bear trend. Yes, sentiment structure is aggressive because it's at the directional, but we didn't have a big MC value change. So volatility wise, we might be more of a neutral. It's more neutral position in a bear trend. So with those facts, we see this violent action. This market at this point should reject here and continue lower. And when it doesn't and it breaks structure here, it's back above the downside pivot. It's a little bit of a tell, leaning on that neutral stance. We're still bear trend. We're still negative. We're still even following that the negative structure from the day before. We're still in this big bear trend. But at this point here, when we don't really just start to roll over, it's a tell that we're not going to be aggressive. And then you take into the fact that we're in for a long holiday weekend, and all those things add up. That the MC value change was 0. That means we're going to be more digestive potentially, and those kind of start to set your expectations, so you're not getting frustrated. Hey, why isn't it rolling over? Or you're not leveraging up, and you're not putting out too much exposure for this sideways trade action. So sticking with a fact focus, really brings you back to what's happening. You're able to clearly see what the market is telling you. The market is giving you these tells all day long. And when you really focus in on the facts of what's happening, those tells are self-evident. If you have any questions, please contact me at info@jsservices.com. Thank you.